Well, it's that time in the show when we get a check on the markets. The government shutdown means a delay in a slate of USDA crop reports. We'll look at what impacts agriculture could see as a result of the issues in D.C. And there may be some movement in the soybean market. Plus, what's happening overseas always makes news. We're going to talk trade and check on the latest with the international markets, too. This week, I sat down with Doug Simon, a commodity broker with Tredas. We got his answers on a wide range of topics.
Well, the farmers are going to the FSA this time of year where they start looking on new crop, production, what they're going to do for acres. So they're doing their crop reporting for last year on crop insurance, which that might not be necessarily impacted because that's on the private side, but you have some of those things that you're doing on the private side or the public side, and the government's where that impacts that. And if you're trying to get market facilitation payments or doing any of those things, yeah, there's definitely some problems there right now. But going forward, it's hard to tell how long that's going to take place. But in terms of government reports, there's a lot of times, sometimes farmers say, "Oh, I wish those government reports wouldn't come out." But we're going to miss out on a WASDE report, the World Ag Supply and Demand. There's a quarterly stocks report, which is important. So the January report's one of the biggest ones of the years in terms of trying to finish up on last year's crop, report or production, but then also looking forward on what's going on internationally.
So what are some things you'll be looking at with that WASDE report when it does come out?
Well, right now, a lot of the trade, even though the government might not be working, the traders are working and thinking in their heads what's going to happen with production. And basically, I think that we'll see a little lower production on both the corn and the soybeans, both through lower yield, but also through lower acres on both of them. Maybe a 40 million bushel cut on the soybean side, maybe an 80 million bushel cut on the corn side. On the other side, that's the production side of it. The demand side of it is probably the bigger concern, however. Ethanol, we've had like a 40% collapse in oil prices. Our ethanol margins over the last 4 months have been negative. Probably worried that we're probably going to cut ethanol demand by 50 million bushels. Exports have been really good on the corn side, but they started lagging here a little bit in the last couple of weeks. So there's a little fear we might drop maybe the corn demand just a touch. And on the bean side, obviously with the trade discussions going on, we've had pretty significant drop in inspections of soybean exports this year. USDA's only got that down 11% year on year, but they're actually down 42% below what they were last year. So that's a pretty big lag on the demand side, on the export side of it. And we'll see on the crush side what will happen there. But so the demand side's a little bit suspect. We'll see a little cut in the production, but I'm more worried about the demand side of it on that report. And then you're going to look at the world numbers from Brazil. We've got their bean crop up at 122 million metric tons. There's some, with the dry weather down there right now, there's some worries that it could be lower, maybe 2 to 3 to 4 lower. I've seen some other estimates that are 8 million metric tons lower. But it's like July down there right now. So you get some rain, it's going to help their crop, if it stays drier. And that kind of band across north central Brazil has been dry, and it's projected to stay dry for the next 10 to 15 days, and it's kind of stagnant, so there's definitely some concern about the weather down there. To me, that's probably the biggest driving factor right now in the soybean market.
Yeah, so any other advice for farmers right now as they do prep for planting season?
Well, we've had a rally in the corn and the beans again here. We had kind of washed out over the last couple of weeks ago. We're back up to 960 on new crop soybeans. We're at 404, 405 on the Dees corn. I really like that place to make incremental sales. I think I've talked about that before. When we get north of $4 on corn, you're looking at carry of maybe 12 cents when we get out next year at this time. Add that carry to it, and that's a 405 plus 12 is 417. Trade a good basis. You got a good number on corn. The beans is really more hard to to just go out and flat hedge that or something. Probably look at some type of option strategy, either sell it, hedge it, and buy a call, or buy a put, sell a call above it. Give you some type of window, because even though there's a lot of negativity in the soybean market, those soybeans can be pretty volatile. I don't think the resolution of the trade side of it's going to give us a big bullish jump on the soybean side. I mean, last year we had USDA saying we were going to export or China would import like 103 million metric tons of beans. This year we're down to 90.
Yeah.
That's almost a 500 million bushel swing in the use that they're going to use in China. So that's still pretty negative on the soybean side.
Any news on wheat?
Well, we're going to plant probably less acres again on wheat. The Risk Management Agency, the number of acres that they've got registered are lower than last year. And last year was the lowest wheat acres we've had in 90 years. So that's important because that means we're probably going to have more acres available to plant corn and soybeans. And last year we planted 90 million acres, almost 90 million acres of corn and beans. So this year, with the lower price of beans, we're probably going to plant fewer beans, more corn. And now if we didn't plant as much wheat, we probably got a little bit more that can go into that mix as well. But if you get up toward 93 million acres of corn planted, bean acres be down toward 86 million, somewhere in there. Really, when you look forward into next year, those carryouts are going to probably be similar to what we had this last year, 1.7 billion bushels on corn and 1 billion on beans, which are, very heavy on the bean side and maybe a little more optimistic down the road on corn.